So you have questions about what you should be doing when it comes to investing, where you should start, and what type of assets you should invest in. Tanya Taylor here from Grow Your Wealth TV, and today I'm going to address those burning questions and help you to get on the path to your investing journey. For best information about growing your wealth through savings, reducing debt, and investing, please subscribe to my channel and hit the bell to be notified when I post videos on Fridays and Sundays. So here are what I'm going to cover in this video. I'm going to talk about the 3 things that you should be considering before investing. And then I'm going to dig into what type of assets you should be investing in. And I'm going to cover 5 things in that section. So let's jump right in and begin. The very first thing that you want to do is to select the dollar amount that you want to invest, and you always want to make sure that you're consistent in the amount that you're investing and also with the frequency that you are investing as well. If you cannot, then just do the best that you can, but it's good to develop a habit of investing on a consistent basis and a consistent amount, at least a consistent minimum. I talk in this video about paying yourself first. I think that's really critical because if we don't pay ourselves first, what ends up happening is that we always find expenses. So we end up spending on all these things and you end up with nothing in your savings or in your investing at the end of the day. Is it going to take some sacrifice? Absolutely. But it's definitely doable because you're shifting your mindset in the way that you're thinking about spending and also in the way that you're thinking about savings. So always develop a habit of paying yourself first. Now, if you want to learn how to find money in your budget, just check out this video. Just for your reference, all videos that I will mention here, I'm going to include in the link below. The second thing that you want to do is to start as early as possible. Now, if someone's watching this and they're thinking, oh, I am of that age where this is not early, don't get panicked. Your investing strategy will definitely be different from someone who is younger than you, but there are so many different asset classes, and I'm going to talk about some of them that will allow you to still continue to invest and still be able to save some money for whatever your goals are. The one thing that you don't want to do is that you don't want to get into this get rich quick scheme, because a lot of time that ends up with people losing their money and becoming very disenchanted with the whole idea of investing. So just know that it's a road that you have to travel, and just be willing to travel that road. And the third thing is to have an emergency fund. I talk in depth about emergency fund in this video here. Now that we've talked about the change in behavior, the next thing that we're going to talk about is what are you going to invest in? And here are the 5 things that I'm going to share with you that you can invest in. The very first one I think is critical for everyone, and that is to invest in yourself. Before you can begin your investing journey, you need to make an investment in yourself and the skills that you will need. And what that will look like is purchasing books or courses, or you can get a coach. Any of those could work. It just depends on how quickly you want to accelerate your investing journey. At the end of the day, investing in yourself is just one of the biggest gifts that you can give to yourself, because it's going to completely change your life. It's going to completely change your mindset, and you will be able to save and invest in assets that could pay you dividends in the long run. Comment below if you believe investing in yourself is important. So the other investments that I'm going to talk about, I'm actually going to rank them from what I would consider to be safest to riskiest. And I'm going to start with bonds and money market funds. So you can actually invest in bond funds or money market funds, and these are typically very safe investments, but the return are usually very low. Generally, the people that are investing in these type of investment classes are those people that are nearing retirement. And also, if let's say you have a project, like you're going to be purchasing a house in the next 6 months, you would park it in like a bond fund or a money market fund, and usually you're going to get back the value that you invest plus maybe a little bit of interest. Then there is CD. CD is a type of saving instrument where you agree to leave a lump sum of money with the bank, and you leave it over a certain period of time, and the bank is going to pay you interest. The interest is usually very low, so your money is essentially tied up for months, and it could also be for years. you do pay taxes on the interest that you earn on the CD every year. So even though you're not getting the money until the CD matures, you are going to be paying taxes on that money at the end of the year. It is important that you know that if you wanted to get your money out earlier, they will assess a penalty for early withdrawal. So that's one of the big drawbacks for CDs, is that once you decide to go that route, you have to know that you're going to keep your money there for the duration of the time that you have signed up to have it kept there, or you will be fined a fee. So the third thing that I will talk about is that you can invest in mutual funds, index funds, and exchange traded funds. Exchange traded funds are also called ETF for short. The biggest thing about these type of investments is that they're diversified. And what that means is that you're basically not putting your eggs in one basket, because they invest in a number of stocks or bonds, or sometimes even commodities like gold. And then you would select the fund. So you have all these funds, and they create this portfolio of stock, bonds, commodities, and then you in turn would go ahead and you would select the fund that matches your investing criteria. So for example, you may decide to select a mutual fund that invests in the largest companies in the US. Or you may decide that you're going to invest in an ETF that invests in gold. So each of these funds have certain distinct differences, which may work better for certain individuals depending on their objectives. Now, I have a great video here that goes in a lot of details on each of these different type of funds. I would encourage you to watch it, because you'll have a lot more detail on how these funds operate and what are the pros and cons of investing in a mutual fund versus an index fund versus an exchange traded fund. Okay, so the fourth thing I want to talk about is investing in stocks. When you purchase stocks, you're purchasing a specific share of a company. Companies that issue stock are said to be publicly traded. And the way that you make money on investing in the stocks is that they either pay dividends, and not all companies pay dividends on their stock, or when the value of the stock increases. So if you were to buy a stock today for, let's say, $30 per share, and the value increases to $50 per share, then you would make $20 per share for each of the shares that you bought. But you would not see that money until you sell the stock. So until you've made the sale, all the money is on paper. Now, investing in stock is definitely riskier than investing in mutual funds. Part of the reason is because your portfolio is not as diversified. If you purchase 4 stocks, you only have 4 stocks in your entire portfolio, whereas if you purchase a mutual fund, even one, the mutual fund probably owns 100 or 500 different stocks within that mutual fund. So that's a big difference. And it's the same thing with exchange traded fund and index fund, that they would have much more diversification in terms of the number of stocks. That being said, though, if you do your due diligence on investing in stocks, you could make really great profits. Again, not a get rich quick scheme. You need to first make sure that you understand how to invest in the stock market before you even attempt to invest. You want to do all the necessary research. I actually have a guide called 5 Steps to Investing in the Stock Market. I will include it below. It gives you the 5 steps that I have used in investing in the stock market for as long as I've been investing, which is over 20 years. I consider my investment strategy to be longer term buy and hold. So I'll buy a stock and I don't sell it for decades. For example, I bought Apple in 2003 at $20 per share, and I never sold it. And I bought Amazon in 2009 for $16 per share, and I've been still holding on to it. And most recently, after the COVID crisis, I bought Tesla for $500 per share. Now, when I talk about making profits, if you were to go now and look at those share prices, you'll see that they are in the thousands when it comes to Amazon and Tesla, and Apple has split twice since I've held it, and the share price is now over $300. So like with Apple alone, I made over 6-figure profit. So there is definitely profit to be made, but it's riskier than the other funds that I mentioned, and you have to make sure that you do your research before you start investing in stocks. I would love to know from you if you are an investor, and if you are, what are you invested in, and what have your investment journey been like? And if you're not an investor, how are you planning to start investing? Now, the last thing I want to talk about, which I consider to be the riskiest of all, is real estate. And the reason why I consider it to be the riskiest is because it's the least liquid. Real estate requires a large cash down payment. But once you acquire real estate, it's not as easy to just turn it around. So it might take some time, but it's also a way that you can quickly make money. And here are some of the ways. One is, if you buy a property, you can rent it out, and so you have passive income, and the rental income theoretically should cover your mortgage. And with interest rate being so low, if you were to hold this property for a long period of time, when you factor in inflation, you literally are borrowing money for free. A second way is that if you purchase real estate in an area that would be considered like up and coming, so prices are a little bit depressed, over a short period of time, you can see where the appreciation in your property is pretty significant. Then a third way that you can make money is that you can just buy the real estate and repair it. And so it's called flipping. You buy it, you fix it up, and you sell it for more than you purchased it for. Or alternatively, you could buy something that's really distressed and you fix it up and you renovate it, and you rent it out. And so you have that rental stream of income. You also have to decide what type of investor you are if you're going to invest in real estate. Are you a flipper, or are you someone who wants to hold this property for the long term and have tenants? With tenants come management of the property, and also with tenants come the headache sometimes of the different personalities that you have to deal with. So you're going to need to decide if you want to go through the hassle or the process of dealing with tenants, or with hiring a management company to oversee your property. It's one of the ways that you could see yourself making hundreds of thousands of dollars in a very short period of time. So I just want to do a quick recap of this video. You want to pay yourself first. You want to start investing as soon as possible, and you want to be consistent. Also, please make sure that you have an emergency fund. So if something were to happen, you have that money that you can tap into instead of going to get yourself into debt. We also discussed 5 things that you should be investing in, or you should consider investing in different ones. But the first one is yourself. Really critical that you invest in yourself and gain the knowledge that you need so that you can invest in the other 4 things, which is the different type of funds that I mentioned, or investing in stocks, bonds, CDs, or real estate. These are all great investment. These are the ways that you're going to grow your wealth, and just there's lots of possibilities for you. The most important thing is that you start now and you start putting away anything that you have, and then you can build up from that. So if you like my video, please let me know by liking it below. Again, comment, subscribe, and share. And just let me know what else you'd like to hear about. Also, check out some of the great videos that I have on my channel. And I mentioned to you before that the link will be below for all the videos that I referenced, and also the link to 5 steps to investing in the stock market.